Hi, everyone. I had a black screen, so I'm starting a minute earlier. How's everyone doing? Hey, Pete. No, it was me. It was Zoom. Hi, everyone. Good. Okay. Steve's not going to be with us today, so good morning. Hope you guys are doing well. Turnaround Tuesday trade work. Anyone take it? I was looking for 1580 to fill the gap right here. 1585 or so from in here.
1785, right?
Oh, yeah, yeah. What's a buck? Yeah,
14.
thank you. Thank you, Still.
Cheers, man.
Anyway, that worked. It's a little unclear now, and gold's coming back pretty good, but this too worked. So we'll see. Still need to close under 1734 by Friday. They have a 2-week reversal. Really can't tell with all my stuff here, but we are lower on the week. I think by about $7 or so. And with gold bouncing back, something I'm looking at, not ready yet, but when you look at this yen up here, kind of have this rising wedge. If anyone caught that, any of the metal short yesterday, peel off a little bit of that and subscribe today. Anyone going to do it? Come on. Who's going to step up during the pandemic and social unrest and 20% unemployment for their new career as a trader? Okay. Um, Dollar continues lower. And a lot of people looking for the 95 level. I mean, this was pretty simple, wasn't it? That's why I had trouble with it. It was so simple. And also, I'll admit, you know, I was bearish a dollar. I was shorting it here. But then, like a lot of other people looking for this eventually to turn, thought there'd be a bid. It's interesting here. I know a lot of people are talking higher numbers in the S&Ps, but um, we're pretty close to completing the wedge objective. And here's the megaphone line right here. So some people are looking for 78.6, and that's 31.35. And I know some other guys that are talking 3,200 before the turn. Okay. Okay, Pete. We're getting a little bit of a pullback in oil. I know yesterday Raksha talked 40. So, we are getting some short term, a little reversal day here. I can't do it because of this RSI reading's almost 80 on the 4 hour, is 80 on the 2. So, although we're coming off, I don't think it's there. But now, if we get a blow to new highs in the crude, I'll be alert for shorting opportunities if we're making new highs and on multiple time frames. Um, the RSI stays under 70. See what else there is to cover. This was a pretty interesting trade, from the breakdown at 135. Now look at where we're at. So um, be very careful pressing the short side of Canada here now. Uh, of course, we had a little bit of an overthrow on this right here. Looks like a wedge, but be careful about getting aggressive here. Uh, I'd say closes back over 136. It's going to be worth a shot with stops under wherever the low turns out to be, and that could be around here. Good morning, Monica. And I think that's about all I'm going to cover. Grega still has a nice pip going, still looking for 128. Pound is retracing here. And the breakout at 110 measured about 112.50. This little breakout here, if you just took, 107 and a half to 110, it gives you 112.50. We almost got there. 112, 27. So close enough for government work. We are diverging. Still a little bit over 70 on the 2 hour. So I know some people are looking for 95 and a half, but I'd also be careful with dollar shorts here as well. See how we're not confirming, especially back under, see these tops here, back under 11 and a half. So I don't see anything I want to do. I know it's only Wednesday, but we have the NFP on Friday. So going to just probably be pretty much on hold and waiting for that number on Friday for the next couple days. And nothing screaming at me this morning anyway. So you guys have any ideas what's your best trade out there, guys? Who has conviction about something out there? Anyone? Don't worry if you're wrong. DJ likes a Swiss. Wow, that's a nice little 3 drive here. Oh, there's lots of ideas. One more pop. Hey, Jess. Long, okay, Kevin's trying that. Buying euro pound. Look at you guys. We got some shooters in here. Short oil. Oh, okay. Long USD CAD. Buying euro pound. Yeah, that has been one heck of a nice pullback in euro pound, right? I mean, the breakout was 88. Maybe we're not going to get there. And you do have something here with this confirmed high. I still think the trend is up, and eventually we could take out this 90-40 high. And Sam's a short equity guy. Just look at a couple of while we're making new highs in the S&Ps, Nasdaq kind of underperformed. So here's Microsoft. So Microsoft isn't making a new high for the rally, but you can tell we're kind of like in some kind of distribution pattern here. And then where's Apple? There we go. I think Apple made a new high. Yeah. But look at the divergence, and this looks like a pretty good 3 drive up here in Apple. Here's one confirmed high, this 4-hour chart. And here's two. And we have a lower RSI reading under 70, and we're going to have 2 RSI readings under 70 at new highs here in Apple. So I certainly wouldn't be long Apple above 325 or so. So just a few looks for you to consider. Sounds like everyone out there has some conviction about something. Good hunting with all of your ideas. You have Larry Tentarelli here. He was bullish market. A bit off the bottom, but before the explosion, like tech, like semis. So we'll see what he's thinking here. He's the publisher of the Blue Chip. Uh, that's an Blue Chip indicator. Let's see what the name of Larry's is. Okay, there's Larry. Blue Chip Daily. Okay, and Larry will be with us at the top of the hour. And I'm going to turn it over to Blake now and see what Blake is thinking this morning. And I just want to remind everyone that, Blake is here for about 10, 15 minutes. He may be here longer today, but he does the daily roundup mid-session. So as a member, after things change all the time here, but after face a few hours later, we may have had some pretty critical moves. And as a member, you could ask Blake what he thinks about the action after we've, had about a few hours of action where things may have changed. So another good reason to become a subscriber. Get Blake twice a day plus all day long in the chat room. How are you today, buddy?
Hey, good morning, Dale. And
Hey,
yeah,
bud.
I'm going to be here a little bit longer today because
Okay.
Steve
Yeah.
is, yeah, he's out, and
Okay.
I'm seeing if Paul Franco is going to come in. See if he wanted to come in for a few minutes. Oh, I'm so sorry. It's like I don't yawn, and then I start talking, and then all of a sudden my brain needs some oxygen, and I yawn. But anyway, actually, there's quite a bit happening overnight. So um, I think the biggest deal right now, in my opinion, is what's happening with like the Aussie dollar and the reversal we saw in the Aussie overnight. It was like as soon as the GDP numbers came out, and it's not like the GDP numbers were the catalyst. Well, let me put it this way: the GDP numbers were actually slightly better than expected, but that might have been the catalyst, but that's not the reason. Okay, and I was actually in the chat rooms when the number came out, and I said, hey, look for a reversal in the Aussie dollar, post GDP numbers, and it's the event. As everybody was probably playing into, Australian GDP numbers probably being a little bit better. The numbers came out, it was a little bit better, and then we got the reversal after such an extended move. That's not an uncommon, type of price action. Would it been, would it have been GDP, and could it have been CPI that did the same thing? In my opinion, yes. So it's not GDP specific, but that's um, what caused the reversal when that number did come out. Now I was just talking with some of the guys from my office, and one of the guys was talking to some of his buddies, actually two of his buddies at different banks, and both of them had mentioned that they're, for the first time in a long time, they feel that the Aussie dollar is a little overbought here. So that's interesting because this is like the first time some of the banks are like going, yeah, well, it's been a big bounce in this environment. Is it going to, you know, is it gonna be able to last, that type of thing? So anyway, I'd be a little careful with um, uh, longs here. Hold on, really quick. One second, guys. Okay. All right. So I'd be careful with longs with the Aussie. And the thing is we're up against, I think, some pretty key resistance. It's the 70 cent level. This is not necessarily as important as it was in the past, but I still think it obviously is holding right now. Now, do I think that the Aussie dollar is a straight out short or a straight up short right now? Not necessarily, but I would be a little concerned if we broke back below the 200-day moving average from these levels. Okay, so but what we should do, and I know my focus is on the Aussie, what we should probably do this morning is really take a look at all the major currencies. I'd had some longs in the euro dollar for the last few days, uh, pulled them off, and the reason why I've pulled them off is because we've had a very good run in the euro dollar, and the ECB is tomorrow. So I wouldn't be surprised if we see a little bit of backfilling here, especially with um, given the fact that the euro is above its 200-day moving average, but it's flirting. And I know we're above it right now, but the 618. Yesterday we were kind of flirting with the 618, and so when we pushed up towards where we're currently at right now, I think It was 111 94. So right where we're at right now, 111.94 level was right here. And I'm just, where we're currently at, I think we could go higher, definitely. But with the ECB, I think there's going to be opportunities. There's going to be like some two-way price action in the euro today. And ADP numbers just came out. Hold on, guys.
Oh wow, came
Yeah,
in
so
at minus 2.76 million. Is that right? It was expected
Yeah.
minus 9.
Yeah, and we were looking at losing how many jobs?
But 9 million. But this is a monthly number, so it can't be 2.76. Something looks wrong with that number.
Right.
Because this number shouldn't be a surprise. We have the weekly unemployment claims, and then we get this number, which is a monthly number, which obviously is not going to be the same as the sum of the weekly claims, but it's going to be in the same ballpark. That looks a little bit odd to me. But anyway.
Yeah, I don't know if that number makes a lot of sense to me either. So anyway, well, I mean, stocks like it, right?
What don't they like?
So to like everything, yeah, exactly.
Yeah, well, that's right. And so I guess as long as stocks like it, then Mikey likes it. Mikey likes it, and everybody likes it, right? Dale, you remember that?
Yeah.
The Mikey commercial.
Mikey was the official food tester. Yeah.
He was the official tester of cereal, wasn't it?
Yeah.
Was it cereal?
Yeah.
Cereal. Yeah. Okay. Anyway, wait. It was a Kix cereal. Yeah. Okay. All right. I remember that. Kix cereal was the only cereal that my parents would buy at a certain point in my life because it was the only one that had no sugar or a very little sugar.
Oh.
And then they finally broke down and said, "I'm going to buy whatever, cereal."
Frosted Flakes with 10 pounds of sugar.
Right, Captain Crunch, blueberry. Yeah, you got it. Anyway, okay. So ADP numbers came in a little bit better than expected. I forgot those were totally coming out today because I haven't really even been paying attention to data as of late. But we are, seeing a bit of an improvement in the equity markets as of right now. So let's take a look at, we're taking a look at the euro dollar. Like I said, I'd be a little bit careful with the euro at current levels. I do think that we could see some backfilling here in the euro dollar. And if you look at the cable, which we talked about the cable, or we haven't talked about the cable yet, but we had mentioned it yesterday, there's the 200-day moving average is coming up, and we have a lot of resistance up here. You can see this like horizontal resistance as we close in on this, 126.50 levels, these areas. I think that the cable is going to, struggle as we're up here. Cause I mean, we haven't been, since we broke down, down here back in March, which came in around 127 and change. Once we broke through that, we haven't been back above it. Now, I think if we can get back above this 127 level, that'd be pretty bullish. But we're facing a lot of resistance ahead of that. This 2650, the 200-day moving average, horizontal, multiple resistances up here. So I think that, the cable, you got to be a little careful, I guess is what I'm trying to say, especially if the euro has stalled. Now, if the euro eventually breaks higher, let's say post ECB tomorrow, the euro really starts to strengthen. Will that carry the cable higher? I believe it will. I think that they will go hand in hand to a certain extent. Joe said it was Life cereal. Sorry, man.
Okay.
Sorry, I wasn't sure what it was. Anyway, okay. So there's the cable. And frankly, I'm not trading anything that has to do with the pound right at this moment in time. I don't have. I was trading the euro sterling 2 weeks ago a lot, and I haven't really touched anything that has the the pound in it right now. Okay, let's take a look at the Aussie. So we did take a look at the Aussie a moment ago, and the Aussie, you know, obviously it's getting a little stretched here. Look on the daily chart where, you know, we're overbought. We poked our head a bunch above a bunch of resistance, and now we're struggling a little bit. And so, oh, hold on one second, guys. Just give me 1 second here. I have to make a couple of adjustments. Oops, I'll do it this way. Sorry. Okay. Oops. No, I thought I did. Never mind. Okay. All right. So, okay. What was I saying? Okay. So the Aussie has made a little bit of headway at this point, and we look like we made a false breakout. And so what I'd be really watching now with the Aussie is, if you're bullish, you know, you want to make sure that this 68-cent level, I guess it would be yesterday's lows, because it comes in right around yesterday's lows. That's like the breakout point there. That's the price you don't want to see broken. Hold on really quick. I'm sorry, guys. I'm you know, this is my trading time, and I don't have Steve here right now. I'm very close to getting a fill. Okay, so let me show you guys what I'm doing here. The US dollar Mexican peso, this currency pair, you know, we're at highs, and the dollar Mexican peso has stopped really kind of selling off here. So what I'm trying to do is I'm trying to establish a position here with the US dollar Mexican peso on this dip. Now, hold on really quick. If you notice, the 618 comes in at 21.29, but I don't. Okay, hold on really quick. Oh, I got more than I wanted. Crap. Okay. So what I was saying here, 1 second, guys. Okay. If you take it from this low right here, right at this level, okay, we'd actually, or testing the 618. Oh man. Hey, Stelios.
Yes, sir.
Can I borrow you for a little bit? I've got to
can.
restart my trade station, and I've got to restart some stuff.
No problem.
Do you mind taking over for a minute?
I'll take over. Yeah, no problem.
Thank you. Thank you.
Hold on a second. Let me take over the screen. Share screen.
Christmas.
Continue. That's the one. Share.
Thank you. All right, I'll be back, and I got to actually unplug my router right now.
Okay. No problem. Right. Okay, I got it.
Thank you. I'll be back in a moment.
No problem. So, first of all, we had those numbers today, which for me were a bit surprising. I have to read up on them and see what the explanation is, because it's quite a bit better than expected. What does this mean for markets? You know, I still think this has been my view for the S&P. I know a lot of people are saying, look, this is not going lower at all, ever, buy every dip possible. And I understand that. But I still think that we will see one leg lower. And I actually feel quite a bit better now on that, because I'm seeing many people who have been bearish for ages saying, look, that's it. There's no way we're going to be lower. We're going lower. So this is what I think is going to happen. And I think we're seeing signs that we may be getting close. Obviously, there's a lot of things happening in the world, a lot of bad things. And the US-China trade deal is in question, although hasn't been actually accepted by any side that, look, this is off. But I think it is in question. And markets just can't keep ignoring all these fundamental things. Now, on the other hand, people say fundamentals have nothing to do with equities anymore, and I can understand that as well. but it's my job, let's say, to look at the big picture, and the big picture says that we are overvalued in many ways. So I think we will see a leg lower. What's going to be the catalyst? I don't know, is the answer. Just like I didn't know when I was saying late last year that we should see as a leg lower. So something, whatever the catalyst is, I think we have, and because the market has been primed now to know that, hey, you buy any dip and you're you're making money. I think this is going to happen pretty quickly, just like it did in March. Is it going to be another wave of coronavirus? Is it going to be something else? I don't know. But I think, and I've said this for days and weeks, that a lot of good things have to happen for markets to just continue going. And yes, we have the Fed and other central banks buying everything, but I just don't see how we can continue like that in a straight line, which is crazy. I mean, if you go on a daily, it's just gone on a completely straight line. So I think that's what's going to happen now. In terms of currencies, I think we're seeing some signs today. Commodity currencies have been. This was my view on the Aussie, actually, and I've posted that on Forex Analytics for a while. We've reached this point. We've seen commodity currencies like Aussie and Kiwi and Norway have done very well, and the Canadian dollar has strengthened over the past weeks. And this is obviously in line with equities rallying. Things are going back to normal. If you remember, in March, on the big sell-off in equities, we saw ridiculous moves in all these currencies, and they were very fast and they were vicious. And I think we're retracing a big part of that as equities rally. But I do think that when equities turn, which I think they will, all these currencies should theoretically reverse. And Blake was talking about this Aussie, and this is a weekly chart, and you can see that we're at a level or a zone which is quite important now. And I wouldn't be surprised. I'm going to have to update my chart here, but I wouldn't be surprised if we see something like that with equities dropping, and then maybe a much more prolonged recovery. But that's very possible. And we see today, even with equities rallying, commodities currencies are not. So this is interesting, just to remember. Sorry, USD CAD. Did I have something on that? USD CAD is interesting also. There's this trend line, and it's funny how certain fibs get tagged so many times. I think we might have a little bit more in the CAD, maybe towards 132, 33, and then I think we probably go up. And obviously, one of my favorite ones, Norway. I've been short dollar Norway and euro Norway. Dollar Norway a little bit. I've covered it already because we got back into this this broad channel that was broken. Again, this now has reached roughly where I thought it would reach, so I wouldn't be surprised if that goes the other way. Another couple of things, interesting ones, I think we need to have a look at is obviously gold and silver. Let's have a look at gold. Again, I'm looking at weekly charts, so I'm looking at very much more longer term moves. I had, for people who have been Forex Analytics subscribers, I have been bullish for quite a while, and you've seen this this great move that we've had in gold from 1,200 to 1,700 now. I think now we might have a pullback because positioning sentiment. I think DSI was in the 90s for silver and something like 80 for gold. So at some point it won't go in a straight line. I think we will see a correction, but my view is any pullbacks, any decent pullbacks, should be bought in the medium term. I'm obviously not a day trader or even just a quick swing trader like the other guys are, but I look at a much bigger time frame, and this is what I see for gold. And silver is quite similar. I think silver is going way higher. We could see a pullback as equities pull back, just like we saw this really pretty amazing dropped from $18.50 to $11.50. So I think we might see another pullback. We could see $16 again. If we do, I think, or below, I think there is going to be a buy. And this is a position I still have on. I am positive on this, and I will continue to. I actually took a little bit off, and I posted on the chat room. I think it was late last week, and I'm looking to buy it back if we get back to close to $16 or something like that. So, like I've said on this webinar in the chat room for a while now, I think most currencies and obviously precious metals are correlated with equities. At the moment, equities rally, the dollar drops, and commodity currencies rally, and precious metals also as well. But I think we might see another leg, and we have to be very careful. So if you've been on the right side of the dollar or of Norway, Canada, or precious metals, I think it's a very, very good time to start unwinding some of this, because I think we might see a little bit of a correction.
Great
what
looks.
else? Well, my views are all on weekly charts usually, so
Yeah.
it's not something that people, are going to do today and it's going to happen tomorrow. They're not as actionable from one day to the next as the other stuff that Blake says and Steve. But these are my broad views, and I stick with them. And
More people should look at weeklies still. It's a good advice for people to get their telescope out once in a while.
yeah,
See the forest from the trees.
do you know what I do? I have my long-term views, and I make up my mind on what I want to do, and then I go to our platform and I look at what the other guys are thinking, and
Right.
if the candlestick or the best technical, or Gregor or Andre or whoever have a good technical level that's coming up that confirms what I want, then I will use that as my entry and or my exit, because people know me from the chat room. I tend to be a little bit early on my on my trades, so
entries?
I use that. Yeah, I do. So I use that to help me, and you're one of the people who helps me.
Well, that's because you're smarter than the market, and it
Well,
takes a while for the market to realize what you already realized, man.
Well, I don't know, but that's I found that this works for me. So
yeah.
So I'm sorry I had to jump out, guys.
No problem.
Hold on. I'm still trying to reconnect here.
Hey, Blake.
Oh my God.
Guy.
What are you doing?
Oh, Steve made it too. I'm sorry. My router went down and I had to reset. I just got back. Stelios has been taking over for the last 10 minutes or so. And Steve, it sounds like you're back.
Yeah, I came back to pick up some things, but I can cover and then go back.
You're a workaholic, man. Seriously, you should see some help.
Seriously. Well, maybe while I'm
not for that though.
I'm really
for a few other issues, but not for that still.
Yeah.
Yeah. How are you, buddy?
Good. Tired.
Yeah.
Haven't slept much.
Actually, Steve, I don't know if are you gonna take over and go over charts? Oh my God, you're
absolutely. But somebody has to forward questions, because I can see questions that were up before I came.
One thing I wanted to say before I give it to you is that something very interesting that the Bank of England announced a day or two ago. Over in April, the amount of private debt repayment that was made was the highest on record. So household debt was repaid at, I think, 7.4 or 5 billion pounds over a month, which is interesting, right? In these times,
it is very normal, Stelio. That is always what happens when a recession begins. The thing is that we've seen in every recent occasion that's exactly what they don't want to happen, and that's why they immediately, in essence, push people to what is considered a normal behavior. Make sure they don't go through it, because it's a normal behavior when you see bad times ahead. It's a normal behavior to want to deleverage.
Yeah.
But of course, when you've built an economic system almost solely based on consumption, the economy can't afford for people to deleverage. That's why they want to give them more and more incentives to, go further in leverage and credit.
Yeah. But yeah, it's interesting, and but you're right. But the economies need people to be spending now, and clearly the pattern is not that.
Yeah, and the first time we actually saw that was in the 2000 recession. It was the first recession, I think, in history that we exited a recession with credit having increased instead of decreased. And since then they're trying to stimulate that even more. Of course, we know how that will naturally evolve and end at some point, right? It's going to be very bitter, but it is what it is.
Yeah.
Once you're building a Ponzi scheme, the only thing you can't afford is for the music to stop playing.
That's true. That is very true. Okay, let me stop my sharing, and okay, I can see all the questions. So whenever you want, I can.
Sure. Since I have no idea what you and Blake covered,
well, Blake talked about Blake talked about the Aussie and Canadian a little bit, and the dollar in general and the euro. So he didn't cover that many things, but
we saved the yen for you, Steve.
Yeah, we didn't talk about the yen, or I talked a little bit about precious metals.
Your
but
favorite, your favorite currency to not trade.
Speaking by way of the CAD, I don't consider it a coincidence. I was looking for this as the second possible area. We seem to have stalled here. The 200 daily moving average seems to be so far acting as support. I think that the risk reward has now turned again, in favor of looking for long opportunities here. And in general, I think that, given the unwarranted, unimaginably, foolish extension higher in risk assets, irrespective of, what happens and, everything else that's going around. I think in general, we should be a little bit careful with pushing US dollar shorts here, because, whenever we see a move lower in risk, the dollar is going to inevitably go bid. It's not easy monitoring a market. I mean, you've either been long this market, in which case, until you see a big reversal day, you have no reason to attempt to do something here, or you're not, in which case, the best thing you can do is sit on your hands, because buying up here makes no sense from a risk reward perspective. Even if you want to buy this market, what you would be hoping for is at least a decent pullback to give you the ability to enter at a risk reward ratio that doesn't look completely suicidal. Same applies in this case. If you want to be invested here in trading the dollar, we've already seen the first move lower, the consolidation, the second move lower, which admittedly can extend towards, I would assume a nice area I would be looking for would be 96.25 to 96.50. I think it's a nice support area. So there could be, a little bit more downside in the dollar, and there could be a little bit more upside in risk assets. But as I said, I wouldn't be pressuring, my luck here. Having to do with the Euro USD, clearly we've broken through this 111.50 area, and we can extend towards 113. I think a pullback back towards the 111.50 area would probably be a buying opportunity until proven otherwise. But anyhow, I wouldn't be pressing those as well despite the fact that I think that the euro can end up squeezing, a lot higher. Speaking of the euro, I don't know if you spoke about the indices. It's worth noting that during the past few days, the European indices seem to be trying to do some catching up, especially if you're monitoring Euro stocks, the DAX as well. They seem to be finally doing some catching up to the move we've seen from the US markets. In essence, they seem to be outpacing them during the past few days. Speaking of the DAX, though, I was expecting an extension higher after we broke through this triangle, but I have to say that we're now approaching here as well levels that are, that are starting to look very overbought in the short term. We are very near this ascending channels trend line resistance. At the very least, at least a revisit of this channel's trend line support should be warranted any given day. So it's a wait and see game, because getting long here is is a very, very bad idea. But on the other hand, I know that people are starting to get very intensely the fear of missing out sentiment, because they're seeing this market just run away and not pull back, and they want to be participants. So at least if you can't avoid this FOMO, at least make sure you find better levels to do that. Having to do with the Aussie and the Kiwi, the Aussie seems to have found some short-term resistance here. I mean, this daily candlestick, it's early in the day, but this daily candlestick doesn't look this healthy at the moment. I mean, we were quite higher on the day, and we've now actually turned negative on the day. Now, I was monitoring this 66.60 to 67 cent area as a very, very strong area of resistance. So I have to say that even if we turn lower, I would first be very interested to see if this area can now act as support or not. The Kiwi also tested earlier important resistance area, pulling back, not turn negative as we've seen the Aussie do. And that's why if you monitor the Aussie Kiwi is in danger of putting up quite a nice reversal here. Once again, in this horizontal support resistance area, this 1083 seems to be quite a formidable resistance area. So, getting rejected once again from there, especially if it ends up being in an emphatical way as it seems to be going so far, I think would be a signal that you need to pay attention to. So Stelio, what else did we cover, or what else do people want us to cover?
I think we can look at questions. There's no problem. Palladium. Friend Dave is asking about palladium.
Yeah, absolutely.
And people are asking about metals in general. I mean, I covered gold and silver, but really with my weekly view, so nothing compared to what you do.
So I'll start from copper, because we know how well correlated copper is to the Aussie. We also know how well correlated copper is to emerging markets in general. So copper seems to be doing, quite nicely so far. But, I need to remind people here what I've said before. There were two very important areas. One, we are attempting to break through, as we speak, the 248 area. It's a very strong support resistance area, but there is also the 256 area, another horizontal support resistance area that's been proven as an important one in the past. Coincidentally or not, it also hosts the 200 daily moving average at the moment. So I would, another signal that perhaps this move is overdone in risk moving higher. Copper might manage to cross through the first area of resistance, but might find it very hard to cross through the second one. Having to do with palladium, palladium produced this short-lived but quite explosive move out of this descending channel. But I have to say that the price action since these 3-4 days to the upside so far is not looking that bearish. I mean, it's choppy, it's overlapping. So I wouldn't be really surprised if palladium doesn't revisit the lows from here. It is a probability. I think that against this like 1800 area, the risk reward probably still skewed to the upside. But given its rather okay correlation with risk assets, and given the fact that they're overdone, I wouldn't be surprised if we first see a move towards that area. Perhaps we don't cross it again before we see a recovery. Not easy to trade palladium at the moment. Palladium has had several times in its recent history that looked very clear to me. That's why I traded it several times. I have to say that it doesn't look that clean to me anymore. So personally, I'm not attracted anymore in trading it. I would be very careful here. I think it's probably quite a tough call attempting to do so at the moment. And since people want to hear about the metals in general, worth noting that platinum has still been failing to cross through this 61.8 and just above it the 875 area. So perhaps it's a consolidation before we move higher, but as I've said, as long as we remain below 875, be very careful, because you don't really want to be buying resistance. I don't think it's a good idea. Now, silver, this is what I drew several days ago, that this triangle might have produced like a terminal push higher before we see a deeper correction lower, and then perhaps we see higher levels. The reason why I was aiming more or less for that area, you can see, first of all, we have that descending trend line resistance, and second of all, we have this horizontal support resistance area at 18.5. So we got rejected from the bottom of that resistance area. Now, in the short term, especially if we close, if we produce a negative close today, I would be very careful, because I think that from a short-term perspective, silver is not a good buy where we currently are. Nevertheless, my general thesis that silver is still extremely undervalued, and it would be a great opportunity if the market gives you the ability to buy it somewhat lower. I mean, I would consider myself very lucky if you manage to buy it again at $15, but perhaps we don't see 15 again. Still stands, meaning I'm hoping for a deeper pullback here, because I will consider that a buying opportunity, but I wouldn't be buying it like after just 1.5 days of sell-off.
That sounds a lot like what I said, so I'm very happy. We're on the same page.
Same here with gold. I have already warned that gold was obviously clearly lagging the last phase of silver's bullishness, and that was another indication that perhaps they were closer to producing some type of a pullback. So it's more than clear that gold is not going to produce a higher high unless silver also reverses higher, because it was clearly overperforming. Now, evidence that the upside momentum has clearly waned is not evidence enough to call for short positions to be initiated. In fact, I think I said it yesterday, and if not yesterday, it must have been like very, very recently, that in my opinion, it's not such a good idea trying to squeeze whatever short opportunity these markets give you, the monetary metals markets gives you. It's probably a much better opportunity to try to see where you can buy them. So of course you can make some money being short if you time it properly, but I think the prudent way to approach this is more likely to wait for this pullback to unfold, and when you see these pullbacks running out of steam, to start loading up of positions on the upside, because in all honesty, all the fundamental reasons, and let's be honest, monetary metals, one way or another, sometimes with a delay, sometimes with a lag, they do still get heavily affected by fundamentals. There's absolutely no reason to believe that monetary metals will get decimated, or they're going to go in a bear market. Or
I like that
whatever
level
else
that you have, Steve, down there.
Yeah, it is an attractive level in case of a pullback. I mean,
Yeah.
this like 1590 area.
Yeah.
Yeah, it is an attractive level. We can,
1650 to 1550 is
yeah,
kind of
and
my,
I'm pretty
yeah.
sure that your guest tomorrow is going to be like ecstatic and enthusiastic. He's
Oh
gonna
yes,
be,
I have to mute mute you
yeah.
tomorrow.
Yeah, he's going to be like, he's going to be explaining to you how this is the top, as he has been
It's a
calling tops
bubble.
in
Yeah.
gold during the past 3 years,
Yeah.
and the
All right.
next stop is going to be at $800.
Yeah.
But
Okay.
allow me to take the other side of that market.
Okay. You just, take the day off. Catch up on your rest tomorrow, okay, buddy? we don't want to lose too many other guests. All right, man? All right, go ahead, Steve.
Okay, Stel. So we covered the metals.
Yes,
What else?
we have a few people asking for yen pairs. So euro yen, dollar yen, and
Yeah, absolutely. Listen, yen, and let's hope that this is a legitimate move because I've got so bored in USD yen being a dead market. I mean, one market that traditionally anyhow, for long periods of time, it has been, a very active and interesting market. Became dead. I mean, it's worthwhile noting until tomorrow and this move that we had. Just notice, I wrote that in the weekend analysis. Just notice. Let me change the candlestick so you can clearly see it. Let me change them to. I wonder if I can change them to line charts, but only show end of day. Yeah, line charts end of day. Just look at, these were like 9 days of price action, right? So just look at this price action. I mean, it was completely dead. I mean, nothing was moving here. So yesterday, finally, this market, I have no idea what gave it a jolt of life, but finally yesterday, this market, like it's like it came out of a coma. It produced this rather formidable for its recent past 100 roughly pip move higher. So I see a lot of people looking for a continuation higher, which might be the case. And to be honest, several of the yen pairs that we're going to have a look at do show that we can actually have a healthy continuation higher. A fair warning though, we are talking about a market, because let's be honest, whatever USD yen does is going to greatly affect the fate of the pairs that we're going to have a look at, right? So it's fair to revisit what has happened recently. I mean, in the recent past in USD yen. So USD yen found a high in the summer of 2015, so exactly 5 years ago, after a huge move higher. Don't forget that this market moved from like 75 to 125 in zero time. Zero time for the size of the move. And since then, it took it 5 years to produce this huge symmetrical triangle. Now, it hadn't broken above or below the symmetrical triangle until it started doing this false break higher of a multi-year triangle, and look at the momentum while breaking higher. You can understand the amount of people that got trapped long there, right? Because you break through a multi-year symmetrical triangle, and not only you break through it, but you produce that kind of a move by breaking through it. So a lot of people were like, oh my God, that's it. This is it. This is a breakout. It's never turning back. Then one more day of continuation, and then look what followed. This huge move to the opposite direction, which not only brought us back within the triangle, not only tested the triangle support, but also broke with, admirable momentum to the downside. And what happens after that? Now everybody's convinced that this thing is moving lower, because they're like, okay, we falsely broke higher from a multi-year symmetrical triangle, and then we reverse lower and don't even look back, and we even gap lower from the symmetrical triangle trendline support. I mean, this now has to be the correct move, right? No. We turn back higher again, and we do the exact same thing we did here in reverse. And then guess what? We reverse once again, and we fall back in the triangle, and we've so far stayed in there. Meaning, at some point, this thing is going to break out and really not turn back. But, can you really fault people for not wanting to follow it anymore? I mean, you have to be extremely skeptical. I mean, you've already seen the pair produced during the past few months 3 false moves out of this triangle. So, there are people that got burned once, twice, 3 times, or people that got burned 2 of these times or 1 of these times, but they've also seen other people getting burned the other times. So, it's very likely that we're going to end up breaking perhaps even higher, because from a technical perspective, let's be honest, we had a very impulsive move higher, then a consolidation. So from a technical perspective, the chances of a break to the upside, to be honest, are higher than the chances of a breakdown. But I assume this move can happen and not a lot of people following it because of the reason I just explained. Now, if that's the case, and if this actually happens, Euro Yen, here it is, Euro Yen has broken through a confluence of resistances and this descending channel, and we might get the opportunity to buy it again if we see a pullback towards like 119.50. You might not, but Euro Yen definitely above 122.80 is going to look like it wants to go a lot higher, because keep in mind that the move above 122.80 is going to produce the first higher high in a very long time, right? Because from a technical perspective, we've been in a downtrend since February of 2018. Pound yen has broken out from this consolidation, and if we clear this 200 daily moving average, which seems to be producing some type of a resistance here, at the very least can revisit this descending trend line resistance, which comes at 146 roughly, and above that it can move a lot higher from that. Now, Aussie yen and Kiwi yen have also broken through the initial formations that we were looking for, which would clearly be corrective, have yet to produce a higher high. So they still lack the absolute proof that the trend is changing here, which is changing a sequence of lower highs in the case of a downtrend and producing a higher high. In order for that to happen, for example, in this market, in the Aussie yen, we need a move above 76.50. In the case of the Kiwi yen, we have more room to the upside to do something like that. But in any case, clearly we're seeing some nice momentum. Now, keep in mind that 70.16 is equality target of the first leg higher to the second leg higher. So I have to admit that I wouldn't be buying any of those yen pairs at current levels. So it's exactly the same thing I was in essence saying about US stock markets. I mean, I can see the argument, doesn't fundamentally make sense, but it's all the easing, etc. I can see the argument why somebody would want to be invested in stocks, because stocks can really keep moving higher, but there is absolutely no argument to do it in the short term unless you see a pullback. So the same thing applies to the vast majority of these yen pairs, especially the ones that we had a look at and involve commodity currencies. So Aussie yen, Kiwi yen, the Canadian yen is one we haven't visited in quite some time, but if you have a look at it, here it is, 61.8 and 200 daily moving average. That's a confluence of resistances we're currently testing. So, pay attention to that. So, all this, I think, can produce some, big moves to the upside. potentially, but I think that you should buy neither of those, none of those, at current levels. So, for example, you want to buy CAD yen. I think a retest of 78.50 would be a much better opportunity to try to do that, right? And in the case of Aussie yen and Kiwi yen, we saw the equivalent levels. What else do we have, Stelio?
We have the end of the hour, so we're done.
We do. Okay.
Well done, man.
Do we have an interview today, Dale?
Yes, Larry Tentarelli's here. Blue Chip Daily was bullish for this recent move up in the markets on his first interview here.
Okay, perfect. So if your guest is here, I guess we can take the rest of the questions for tomorrow.
Okay, and I'll see you Friday.
I'm not missing tomorrow. Trust me.
Okay. All right. Thank you, buddy.
Thank you, Steve.
Thank you. Thank you, guys.
Thank you, Stel.
Thanks, Coach.
All right, Larry, I'm getting you set up here. Okay. Unmuted.
Mute. Can you hear me now?
Got you, Larry. Welcome back to Face.
Great. Thanks for having me back. Glad to be here.
Yeah, and do you remember how to share your screen?
I do. I'm going to hit the share screen button.
That's it. So before you get going, Larry, I want to congratulate you on some great calls. There was a lot of fear in the market when you were getting long and talking about tech and some of the leaders that were going to take the market higher in the midst of this pandemic. So congratulations. A lot of blue chip calls from your Blue Chip Daily.
Thank you. I really appreciate that. Yeah, thank you. I appreciate that, Dale.
So, you're only as good as your last trade. So what now, bro? So what are you looking at here? We're looking at Square. Wow. That's new all-time highs.
Yeah, we've got Square. So there's a couple. So I'm still positioned pretty much the same way. So tech was the strongest market. And the last time that I was on, I think we took a look at the NASDAQ 100, and that's where I started to buy. So I started with the tech ETF, and then I added Microsoft because tech of all the major markets had corrected the least. So that's where the highest relative strength is. But where I'm seeing some new interesting ideas and something that I've been adding to our buy list over the past few weeks is some of these cyclical names. So companies like Carrier, some energy names, some copper names. The cyclicals, I think that this move in cyclicals is a real move. I don't think
would they be considered value?
And, we've got some exposure there too. It would be considered value. Yeah.
Oh, okay. Yeah. So are you a believer in this shift from growth to value? Because it's certainly been starting to, the worm has turned. You think it has legs?
I'm not a believer in the shift from growth to value per se, because I see a lot of these growth stocks, like these software stocks, are still very strong. The semiconductors are starting to break out. But what I do think that you're seeing is if the market starts to price in an economic recovery, which is what it's starting to do right now, then it's going to move into these higher beta cyclical stocks like these copper names and some of these names that got hit pretty hard. So I don't think that we're seeing a shift from growth to value right now, but I do think we're seeing a shift into the more cyclical names as the market tries to price in a recovery. So if you take a look, for example,
so it's a broadening out then of this,
yes,
which long term could be very, very constructive, right? The broadening out of this instead of just having a concentration of 5 stocks holding up the market.
It'll be much more constructive because what happens is, like you said, if there's only a few stocks that are holding up the market and then the average stock isn't doing too well, then it's a pretty weak market. But if you take a look, so I'll just go through the charts because charts are my thing. So Southern Copper, which is obviously, it's a very cyclical name in the copper industry. You can see it's just got a steady uptrend. So what I look for, and you probably know this from, hearing me every day, is I don't get into indicators too much. So my charts are pretty simple. I'm looking for the price trend and I'm looking for the moving average trend. So if you look at Southern Copper, it's just a steady uptrend, higher highs, higher lows, the 200 days turned up, the 50 days turned up. So that's a very strong cyclical name. If you take a look at something like Fastenal, which is in the industrial supplies business. So these guys make things like screws and door handles and all kinds of just basic industries. This is acting like a growth stock. It's a cyclical industrial, but you can see this is broken out to highs. It's in a steady uptrend. Industrial metals, so XME, which covers copper, steel, other industrial metals. You can see obviously this sold off sharply from 29 to 13. But since this, let's call this the low for now. So I don't predict if it's the final low or retest or anything like that. I just focus on what the market's actually doing. But if you look at this trend, it's very, very solid. So there's a lot of these cyclical names, even energy.
That was this one that you're showing is the weak sister comparatively. I mean, I look at it and it looks like a retracement move compared to others that have, recovered 61.8 or are at new highs. So I just have
something like Carrier. So if you take a look at something like Carrier, so Carrier and Otis were spun off from United Technologies. And so Carrier, they're in the HVAC business, so air conditioning, heating, things like that. So if you're looking at, the cyclicality of the economy, when you see a stock that's in, building materials, AC units, and HVAC breaking out the highs. So these are all bullish charts. If you look at Otis, which if you've ever gotten into an elevator, you've probably seen the Otis.
Oh, yes.
I mean, this is, these were spun off.
Okay.
And, just a steady uptrend. So that's in the industrials. But if you take a look still in growth, so semiconductors, SMH, I mean, this is, steady uptrend back over the 200-day. And then it broke out again yesterday. So I'm seeing where I'm looking for the breakouts. I'm seeing breakouts not only in software and semis and the traditional, I added some Facebook stock recently. And if you take a look at Facebook, it hasn't had a close below the 20-day moving average going back to April. So, I'm seeing strength in both parts. Where I'm not seeing the strength is some of the more defensive names like the pharmaceuticals. I thought the pharmaceuticals were going to move a little bit faster, and they haven't. REITs are still struggling. REITs, haven't really established an uptrend yet. But I'm just, where I'm seeing the uptrends is really still growth, but a lot of these industrials and cyclical names.
What was the name of that copper stock, Larry, again?
There was two of them. So Southern Copper is SCCO. Okay. And this has got the uptrend. But if you take a look at Freeport, which is the major,
right?
So Freeport just 50
starting.
Days turned up, just starting to break out here. And if Freeport can get over the 200-day moving average and over $10, then $10 is a big number for Freeport. That could move. It moves fast once it goes.
Okay, so I know you're not a forecaster, and you just trade your. In fact, besides your moving average, Larry, you trade pretty naked, don't you?
Yes.
Well, keep your shades drawn.
Yeah, they're closed right now.
Okay.
But yeah, I'm really looking at the price trend. I could almost take the moving averages off the screen, but the moving averages really help me out a lot.
It's your confirmation. But having been around for a while, this has been a remarkable recovery, and surpassing a lot of points that people that were bearish trying to short into this strength. But at this point, don't things feel a little bit stretched to you, having seen a lot of market cycles, this recovery? I mean, can't we have a correction of this recent rally, just like we had a correction of the crash?
Sure. Yeah, absolutely. And I've got I've got more cash than average. I'm still over 30% cash. And in hindsight, I wish I didn't have any cash because I would have made more money. But yeah, it's
Right.
still volatility is still high. I look at the average true range. That's still pretty
Okay.
high in the S&P. The VIX is, I think, at 26, which traditionally that's 26 is pretty high on the VIX.
It used to
It's-
be.
Yeah, it's not 85, so we think like we feel like we've gotten a reprieve. But if you take a look at the VIX, it was trading in the low teens forever. So VIX is still high, ATR is still high. The news flow, and that's what the the wild card is the news flow. But it could pull back at any time. But what's been encouraging is every time that the market seems to pull back, they just keep bidding it up higher. There's a lot of liquidity out there. I think the number worldwide is over $10 trillion in stimulus that's out there. And
Wow.
QE, once the central banks put all that money into the markets, it's definitely been a factor.
And it also has a lag time. Monetary policy usually takes 6 months or so. And well,
I
we
think they
started
started to pump the money in
December.
I think they got in with these repos and the QE pretty fast, and they all
Yeah.
went all in. And it's a lot of it's based on what this healthcare news flow is, but the markets, it's been a strong recovery. There's no doubt it's been a very, very strong recovery.
Okay. You mentioned an oil share. We've had a real nice bounce from minus 38 on WTI to where it's doing here. What was the oil share that you mentioned? They finally have started to turn, right? Okay.
Yeah,
there you go.
there's a few. So I started to buy Exxon back in April once it came over the 20-day moving average here. So
Mhm.
Exxon is just starting to break out. If we look over this range, it's about at a 90-day high. But some of the other names now, people have to be able to withstand a little more volatility in these names. But Halliburton is in a pretty strong uptrend. Now, most of these are still under the 200-day moving average, but EOG Resources, it's just it's just a steady uptrend. The 50 days turned up. A lot of these names, there will be some shakeouts, but we've been buying energy for about 2 months now.
How about the miners? We've recently had a pullback in. There you go. So, what's your take on that? Perhaps, I don't think a lot of people were looking for this sell-off that we had up there. It was a nice little 3 drive to me, and I think gold might have another $100 to the downside or so. What do you think of the miners here? People starting to give up on them, maybe back to 51 possible on Newmont. Newmont led it.
You're right. So I've got the miners. I've got GDX. And this has been a pretty sharp pullback into the 50-day. So I was expecting to see it come a little bit stronger off the 50-day, but you've got Newmont, Barrick Gold also came right down to almost the same chart. If you look at where they are in the 50-day. So in the shorter term, if they don't hold, if Barrick doesn't hold 23, then I think it probably comes down. I did expect a little bit sharper of a bounce here, and I couldn't tell you why. But the short term momentum is definitely to the downside. So I'm still holding this, and I'm looking for a bounce, but they haven't bounced the way that I thought they would coming off that 50-day. But like you said, they've had a massive move. Newmont doubled off the low, but this is definitely I think a key point for the miners. A little bit weaker than I expected them to be.
How about interest-sensitive stocks, utilities? You already showed REITs aren't really doing that well. Some of the defensive names that people were buying, they're getting rid of. So utilities, they don't look bad.
I don't do anything with utilities.
Okay.
The only one that I've ever really had any interest in is NextEra, which is pretty big in the clean energy space. So, you know,
Okay.
they've got clean energy, solar, wind, things like that. So this has been
Mhm.
really the main utility that I focused on, but I don't have any utilities right now. I'm really more focused. I've got a lot of tech, and
Okay.
I'm starting to add, you know, some more cyclical, some consumer discretionary things like that.
Housing stocks?
You know, I don't have any housing yet, and
Okay.
housing is strong. The home builders, the home construction ETF is very, very strong. I don't have anything yet there. What I'm looking at more, I'm looking at Carrier, I'm looking at Otis, I'm looking at Fast and all, but these the housing stocks have been strong, even Home Depot and Lowe's and home improvement. And I've got to tell you that surprised me because you know the fundamental guy when I sit around and talk to my wife about things is
Yeah.
I wouldn't have expected with the employment market the way that it is. I
Right.
wouldn't have expected, you know, housing stocks to do as well. And that's why I try not to use my opinions because my opinions usually are, you know,
Yeah.
are off with so I just follow what the market's doing. But yeah, these have
Yeah.
been very, very strong.
Yeah. I mean, your friends and people you know that aren't in the business, how do you explain to them, Larry, that, really, have we had economic improvement? Not yet. How do you explain the disconnect of a huge run and recovery in stock prices compared to what we're going to be seeing with unemployment and all PMIs and all the numbers that we're getting? Don't people say, Larry, how what's the stock market? It doesn't make sense with what's going on. How do you explain that to laymen?
Well, you're right, and there's definitely a disconnect. So I stopped watching all the news. So I used to keep,
All
you
right.
know, I'll come downstairs and my wife will have like the local news on it, and I just, you know, after 2 minutes, I just don't want to listen to anything because it's all gloom and doom. And I used to keep, you know, Bloomberg on every day, but I had to turn the volume off because it's a lot of gloom and doom, you know,
Yeah.
bad numbers. And what I explain to people, because I've got friends and relatives, is two things that I explain. I do think that all the liquidity is the biggest factor. I think that all
Right.
the money that's been pumped into the system is the biggest factor. But the other thing is I think that the market priced in a worst case scenario. So when you look at Home Depot, it almost got cut in half in what 5 weeks. So the I think the market priced in you know, an end of the world
Yeah.
scenario, and we're not seeing that right now. So I think the combination of, you know, maybe it's not as bad as we thought it was going to be, plus the $10 trillion is what I think you've got.
Yeah. So basically, tidal wave of liquidity that isn't showing in the real economy. So, it's almost like, and you're a veteran, stocks never used to trade like this. They've been commoditized, don't you think?
Yes, the moves today. So I started in '98,
Yeah.
and the moves today
Oh, you're
are
a youngster.
yeah, yeah.
All
But you
right.
know, I've been through. So I was, you know, through the tech bubble. I was
Yeah,
through
you've seen a
GFC.
few. Yeah.
I've seen a few, but the moves today, Dale, are the fastest that I've ever seen. This software shakeout last week where they, you know, shook out Shopify, and you know, if you look at Shopify, I think it had a like a 25% drawdown in 2 days. You know,
Yeah.
Dockies, I mean, just all these names, and it was a tricky one because they opened it up on Monday. So I've got Shopify. So they opened it up at the
Wow.
top here, and then you know in 2 days it's what 160 points in 2 days. Now it started to
Did
recover.
it spike on earnings? Was it like buy the rumor, sell the fact type of deal?
Now it just I think the earnings, and I'd have to look, but I think the earnings were somewhere
Uh,
back here, and it was just running up. I think it ran up a lot with that Facebook announcement that came out where they're going to partner up.
okay.
But the surprising thing was they opened also all of these software stocks. If you look at that Monday, so DocuSign went from 136 to one. This shakeout right
Wow.
here,
Yeah.
you know, if you've got stocks that correct 15 or 20%, that in the old days, that might have used to taken a few
Month.
weeks or a month. Yeah,
Yeah.
And now it's like 2 days, and before
Yeah.
you know it, you've got to have your head on a swivel.
I have a couple of issues from attendees that would appreciate your look. You have a view. Jack would like to know if you have a view on Boeing.
I do. I really do.
Okay.
So I covered Boeing. I did a weekend video for my subscribers this week. I think that Boeing, the risk reward in Boeing here is very good. So if someone has a longer term perspective, then the risk reward, if I had this position, and I just talked about this last night online, the only reason I don't, psychologically, I don't do well trading below the 200-day in all this chop. I'm not mentally as geared for that as I am, these uptrends. But if
Yeah.
I just look at the risk, so if I called 120, so if I took Boeing right here, I've got $33 worth of risk. So I'd set my stop under 120, let's call it, right? So
Yeah.
there's $33 worth of risk. And then on any recovery, I mean, if it gets back to this year's highs, you've got $200 worth of upside. So I think that
Even back to 211, what's
Sure.
what's that? Your 200-day up there?
yeah, 282.
What's the one
This
at
is the
211?
100-day.
Okay,
And
that's
Boeing,
still a good R from here.
this is a stock that I look at every day, and I told my subscribers last night, my view, I may take the plunge on Boeing at some point, but I think right here, if someone can handle, the shorter term volatility, if I can risk $33 to maybe make, 133 or 233, I think it's solid math as long as they know there's probably, a 50-50 win or lose rate.
Okay, thank you for that. Look, Didier is asking for Glencore. Do you follow that stock at all?
I don't. I believe they're in industrial metals. Let me see if I can pull up a chart. So
There it is. Yeah.
I've got 3. So let's see. So Glencore, it's improving in the uptrend, and this looks
Yeah.
a lot like the Freeport chart.
Yeah.
And this is another one. I think I'd want to have my stop underneath the 50-day, but I
Right.
think this whole group is improving, and I think it's a good speculation.
Okay. Well, nice review, Larry, and some real good looks. If you'd like to show your website now, or if there's anything else you want to cover, there it is, the Blue Chip Daily Trend Report
Sure.
that Larry publishes.
Yeah, bluechipdaily.com is the web address, and if people go on to the recent best trade alerts, so what I'll do is I'll post, because I post every day on my Twitter feed, and then they can just see some of the chart work that I do. What the process is behind the signals that I use.
Okay, and I just have to leave you with a forecast from Dave Malum, who knows you, I believe, and he said, the great interview with Larry is really great, but please let him know that the trend on its Patriots has finally turned down. Are they under the 200-day?
They are in a steep downtrend below the 200-day.
Are you hedged?
We're jumping on the Tampa Bay Buccaneers bandwagon.
All right.
I really think I think that the Patriots, they're going to have it. I think they're going to have a tough year.
I'll be happy just to see games.
Me too.
On TV, so
Dale, you hit the nail right on the head, my friend. I cannot wait for even a Tuesday night college football game from the MAC conference would be amazing right now.
Oh, did you go to a MAC school?
No, but I'm a big college football fan, and my son and I, Tuesday nights and Wednesday nights, we dial up those, Akron versus Central Michigan. That's good stuff.
Yeah, I went to Northern Illinois University in DeKalb.
Oh, sure.
So,
yeah. Great.
So
great
I
team.
follow
Michael
the
Turner
MAC.
came from there, right?
Yeah. So, let's keep. What a great way to wrap it up. Hoping that I would really know that there's a return to normalcy when I hear the pads.
Yes, sir.
On TV, Larry. So really, thank you again for coming, Larry. Great calls. I love your unemotional, detached looks and your moving average looks. And anyone who's a stock trader, I know we do mainly FX, check Larry out. at bluechipdaily.com, and we'll
Oh yeah,
have you
my
back.
Twitter. Can I give them my Twitter
Yeah,
feed real quick?
sure you could.
It's at LMT978.
And why 978?
That was the zip code that I lived in at the time, and Tentarelli was too long to put in my Twitter
Okay.
handle. So that
Okay.
was the I'm sorry, not the zip code, the area code.
Yeah.
But I said, you know what? Let me shorten it because people would say, hey, I can never find you because I can't spell your name. So I just made it, my initials and the area code, the phone area code that I lived
Okay.
at in Massachusetts at the time, and that was it.
Okay, and Didier, it's LMT, like Tom, not D.
Yes.
Okay, thank you, Larry. Good hunting, and stay safe. And I guess we could keep trading even if there's martial law, right?
Dale, I'll tell you, yeah, I'm glad to be back. Thank you so much. You stay safe too, and I always look forward to talking to you.
All right, buddy. Everyone, that's Larry Tentarelli, and some good looks on individual issues. And that's going to be a wrap for us. And we'll see everyone tomorrow. Remember, don't just count your pips or your percentage gains. Count your blessings, and we'll see you all tomorrow. Adios. Thanks, Larry.
Dale, thanks so much. I appreciate it.